I'm struggling to find words today, Steve, for where we're at.
They're eating the dogs. They're eating the cats. I know, it's crazy, isn't it?
We're back again. Jacob, Steve, Total Money Management. You know how it is.
You know the drill, folks.
We're combining the week that was into one weekly was.
The fortnight that was.
Yeah. Mainly because the news that came out over the last, well, not news, but the tariffs that were imposed on the 2nd of April have totally wiped the market out.
Liberation Day. Liberation Day.
I can't believe it.
We're going to liberate you from your money.
And I suppose the other thing is I'm trying to look at Steve and not smirk because our put options have gone through the roof.
Kath had got the cream. Oh. But in all seriousness, it's a really weird time. And it is funny when you have put options. Because you wake up in the morning, you go, oh, my options are up 100%. That's great. And then you read the news and it's like the world is dying going into it. Oh, yeah, well, that's cool. I got my, I'm up 100.
Yeah, it's me.
Well, I look, and I'm not boasting, but my put options went up 150% last night. At the start of the week, they were both basically, I think I said a couple of weeks ago, they were up 30%. Then they went back to zero. At the start of the week, they were -2. Yep. Now, my S&P one's up 275, I think, and the NASDAQ one is up 180 or something.
Yeah.
But options can, I'm serious. The end of next week, they could be back to zero.
Yeah, for sure. There could be some announcement Trump makes, and then next minute there's -5 again.
Yeah, it's all going to be good, right? Sell all those.
Yeah. But it's nice to be quite coincidental given we've been conservative and
it's the worst thing about being bearish is you're basically not relying, you're predicting that things should get really shitty. And so, you go to a dinner party and go, I was bearish, sucked in. You're all losing money, but I'm right. No one takes any joy in that.
You can be bearish for a very long time, it feels. Because the market can obviously be overextended, like we've seen.
Absolutely. The funny thing I think is, and you always hear this, like people who are permanently bullish, lots of fund managers, just lots of people in the field in finance, who say, people are bearish because, they just want to get clicks and stuff. And, like bear porn and all that sort of stuff sells, And it's like, guys, I mean, if you look at the markets, people, fundies are overwhelmingly bullish.
Yeah.
Right?
Oh, buy and hold. All the narrative is now buy and hold.
Yeah. This is the price you pay for admission. It's like fucking some hell of a price.
It's gone from buy the dip to just buy and hold.
Yeah. Just keep buying.
Yeah.
Right? But I'm serious, like they go, the bears are, the bears get clicks and stuff. And it's like, mate, seriously, the bullish people, it doesn't, the world could be hit by a meteor and they'd be going, it's a good opportunity to buy the dip. Like they're incessantly bullish.
Yeah.
At least bearish people, depending. If you're a perma bear, that's a different thing. If you're just always bearish, it's a bit like, oh God, go and get a job or something. Like
doom and gloom.
Don't be depressive. But we have been bullish on energy, like a whole range of things. But overall, the US market's been really expensive.
Yeah. I think having the self-awareness to go, things are expensive.
Well, it's stupid. It's ridiculous to. In my mind, it's ridiculous to look at data, look at history, and go, it'll be all right.
Ignore that.
It's like seeing a tsunami and going, it'll be all right. Once you swim past the tsunami, it's really smooth, and it's like, right, okay. So I just don't understand that stuff.
Let's get on to the last week's the week that was, which you obviously put together pre-April 2nd, is quite telling because there's a chart in there that says more than half of Americans now believe a market crash is on the horizon.
Yeah.
Fast forward 2 weeks and here we are.
Here we go. This is 2 weeks ago. So this is what, March the 24th?
Something like that.
Yeah. The worm's turning, right? And, it's turning a lot and it's turning very quickly. So I think, did you say we're going to run through 2 weeks really quickly, and then
we'll run through a couple of weeks, and this will be launched on Friday as normal after the tariff special that we've launched on Monday, just gone.
Right.
Let's talk about the simple moving average. So there's it's coming down now, and it at the end of the day, it's coincided with CAPE. So we've seen CAPE that's been really high for 30. It's been at 38, 39 for a long time.
Yep.
It's now the market's cooled off a bit and started to pull and crash, which is pulling the 200-day moving average down. What we're saying is just keep an eye on that 200-day moving average, because when price is below that, that's where kind of shit hits the fan and
bad things happen.
Yeah.
Yeah. It again, I think we talked about it last week in the podcast, where we're basically saying keep your eye on those shorter term indicators. Yes, it's valid to talk about the long term, no arguments, but the long term doesn't generate any emotion, right? You know, you think about your super. Do you actually get emotional? No. Why? Because it's so far away. Next week, you'll get emotional if your portfolio drops 5%, right? Because it's a different time frame. And so that's where the shorter term technicals, moving averages, momentum, you know, that sort of stuff can really help you out. Yep. At least to the point of saying, okay, you know, Steve and Jacob said bad things below the 200, we're below the 200, bad things are happening. Okay. And that at least, if you at least get an explanation, that helps just calm you down a little bit, right?
Yeah. The thing to always remember is that there's a lot of volatility, right? There's a lot of volatility, especially in times of peak global economic uncertainty.
Absolutely.
And even just acknowledging that and going, okay, I know this is going to happen, will calm you down.
Yeah.
Let's bring it back onto Aussie soil. So let's talk about...
Foreigners, that's all right. Go back one? Yeah, just go back one. We'll talk about this a bit more, but there's a high ownership of US equities, which we talked about again last week.
Yeah.
And the concern there is that, well, like now, the Japanese and the Chinese, particularly Chinese, might say, listen, we're going to dump these, and that'll push the US market down even more.
Yeah. Well, China have already said they're imposing more tariffs on the EU, and if more countries do that...
Yes. There's, as we said last week, if countries say, righto, you guys have got to buy our bonds to the local companies, then the local companies say, all right, well, we're going to have to sell down the US equity portfolio to get the 100 million to buy the government's bonds. And in a lot of those countries, China, Japan, Europe, the governments have a lot more influence by saying, dude, we need you to buy these bonds. And it's not a like, oh, no, we don't like it. It's a like, yes, sir, we'll do that.
Yeah, you need to make sure you do it.
Yep. The dominant thing at the moment, the theme... And I repeated this in the global financial crisis. The global financial crisis morphed from being an economic problem into a political problem. Okay? And what I mean by that is, if you leave the market to itself, it'll just go really bad, right? Or really, really good. That's what the market does. It's the government that steps in and says, righto, we need to just deal with things here, right? And so that's a political issue, right? And that changes the power dynamic.
Yeah.
Okay, it's a really, really important thing for people to understand. Trump and other politicians are now asserting themselves in terms of economic policy, and that has implications for markets, right? And this is what we've been saying for a while. At some point, you won't be allowed to buy garbage from Temu or Shein or whatever those Chinese things are, right? And indeed, they've done the de minimis regulation, which is anything under $800 used to just sail through, right? No customs. Just, if you bought a crap $5 T-shirt from China, right? It just sailed through because it was under $800. Zip, that's gone this week.
Yeah, right.
But that again was recommended about a month and a half ago in the America-China report. I think I highlighted it. I may not have got to it, but that was one of the things. Now, part of that is to try and get the fentanyl stuff.
Yeah, well, I mean, there'll be billions coming through.
That
under $800.
Absolutely,
It makes sense.
And that's what they're doing. So what they do is they take $1,000 and they break it down into, three lots of 300. Bad mathematics, but and send it through that way.
Yeah.
And that's what's been going on. So that's leveled now. So you know, as we spoke about in the tariffs, there's lots of change coming.
Yeah, I mean that makes sense to me.
Albo.
Let's talk about Albo. I mean, politically, like, we're not going to get involved in the politics. Really, we'll give an opinion probably a few times, but it's pretty even between the two.
Yeah, I think Dutton's really fallen off in popularity, and Albo's come good, which I think is completely the opposite of what I said. So, you know, the government are polling a lot better than they were.
Yeah.
Mind you, as I say, things can change really quickly. But generally, we're in an election cycle. It's funny, you know, because this should probably help Albanese with the tariff stuff.
Well, I was going to say, people really want to know how it's going to affect Australia.
Yeah, but the big issue is in a crisis, people cling to leadership. If you look at when we have a natural disaster, John Howard and the Bali earthquake and tsunami, right? You know, really popular for John Howard. Anna Bligh in the Queensland floods, Anastasia during COVID, all leaders during COVID, right, were really, really strong, and they went on and killed it in the next election. People just then go, this is not a good time to be changing captains of the ship, right? And this may suit Albanese. In Canada, the more Trump shitbag Canada, the more Justin Trudeau, who everybody hated.
Yeah.
You know, they were going to get absolutely slaughtered. Now they're back in the lead with Mark Carney. Right? I mean, what a turnaround. So, you know, if Albo's got any sense, he'll just keep shitbagging Donald Trump.
Yeah, lean into it.
Absolutely.
Yeah. Well, he's also brought out minor tax breaks.
Yeah, the budget stuff's okay.
Here's a breadcrumb.
Yeah. It's here's $3 a week. I mean, righto, but yeah, just pointing to, again, now we're going to have to think about interest rates, whether the Reserve Bank will cut further. But
let's talk about it.
Well, but if the tariffs give us inflation, well, the Reserve Bank's not going to be cutting rates if there's inflation.
I saw something funny.
They're going to be raising rates.
Yeah, I was thinking that. I saw something funny on the socials. Someone explaining that every 1% they cut the rates, house prices are forecasted to increase by 10%.
Yeah, yes and no. I don't believe those correlations because it depends. It all depends on the lending, right? If people borrow more, fine. But if you're standing around, the world's going to hell in a handbasket with tariffs. You don't know what the hell's going on. The last thing you're going to do is go, I think I might slip in and buy another property. I mean, some people might, but overwhelmingly, I don't think so.
Yeah, well, we spoke about it time and time again in the property podcast. They've got to have the capacity to do that.
Yeah. And that's why only the wealthy are in a really good position to buy assets when they're cheap. That's why every crash, we keep seeing this expansion between income distribution, because when the markets crash, wealthy people are able to go, cool, I can buy all the assets. Who are they buying them? They're buying them off the people who are struggling. Right, so the people who are struggling then struggle further. The wealthy then wait 5 years, the market bounces back and they've got more wealth. So that's why we've got the income inequality that we've got.
Yeah. Okay. Thursday, retail investors pile in while the pros sell, which is what we've kind of just spoken about.
Yep.
And this is just proving the point what you've just spoken about, where people jump in at the top.
Yes.
They're buying the dip.
Yep. Exactly right.
And then they feel it later.
The retail investors, or the ones who are uneducated, and I don't mean that in a general sense, I mean that in a stock market sense. If you don't know what you're doing, but the market's booming and you get in, now like we know, the market's fallen like 10, 12% in 2 weeks, that's when you go, maybe I don't know what I'm doing. It's like, that's the way it works.
Yeah.
Right? Smart money gets out at the top.
Someone was saying the other day, Warren Buffett's buying this dip.
Yeah.
He's not.
Yeah. I love how 25-year-olds have got advice for Warren Buffett.
Yeah. Household debt. Look, do you want to spend any time on this? We spoke about it a lot.
It's still batshit crazy.
It's still skyrocketing.
And it's going to be a problem sometime. Now, yes, people, you can write to me and go, you don't know what you're talking about. It's been 20 years. I understand all that. I'm just saying that it's sometimes going to be a problem. And, you know, when the problem hits, there might be a lot of property owners who struggle.
Yeah, and there's a fair few. I've been talking to a few real estate agents, and they're noticing the market slowing in certain areas.
Yes. Yeah. You've got to get a little bit more. When the market's high, you've got to be a lot more targeted. And that's why I'm saying I'm bearish on property overall, like stocks, but it doesn't mean I'd see a cheap property and go, oh, that's ridiculously expensive.
No.
I'm still buying stocks here and there because they're cheap. That stock, let me give you an example, and this is not investment advice. Woodside Petroleum yesterday...
22 or something now, isn't it?
Yeah, dropped like 10% or something in a day. Now, oil's gone down another 6%, so Monday it'll probably be down even more. The PE I checked this morning is like 7.5 or something.
Yeah.
Right? So...
For Woodside.
Well, yeah. I can say, the Australian market's still a bit expensive. US is crazy, but Woodside's really cheap. If I buy Woodside and say, oh, well, I'll wait for the bounce and sell in 2 weeks, it's like, that's a dumb idea. But fundamentally, you could look at it and go, Woodside's really cheap, and if I hold for the long term, they're paying an 8% dividend. There's lots of capital growth potential, blah, 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 blah.
Yeah, you're not looking to buy Woodside and go and turn it around in 6 to 12 months.
Yeah. I hold Woodside and I'm already down 25%, I think.
Yeah.
But, that's why I say at one point I was up 20%, I think.
Yeah.
So if I remember correctly, Woodside would close to being nearly half of what it was in a very short period of time.
Well, strategically, look at it. It's got a low PE. It's been around for
low
ages.
Low PE, dividend,
Overall, oil's not that expensive at the minute. So
even if you said Woodside's got zero capital growth, which a PE of 7 denotes, what that says is, are you happy getting a 9% dividend?
Yeah.
Even if 10 years you went, all I got was 9% per year dividend, it's like, mate, you've still done pretty well.
Yeah.
Right? And it's unlikely that Woodside's going to be the same price in 5 years.
Yeah, well, yeah. If oil starts to go off, it'll just go nuts. Tesla versus
Speaking
BYD.
of losers, right, get on to the socials, you young fellas. We're going to talk about Elon.
We're losing the whole under 25 demographic by bagging Elon.
Well, they'll be back when he crashes on his face like he is at the moment. That's what's happening.
Yeah.
We said it last week.
Yeah, well, he's out in May-ish, isn't he? Is it May? 100 odd days he had.
Now he's suddenly like, I've done my job. Yeah, you've done it all right.
You've allowed us to talk about you. So BYD. So this is one thing about BYD I don't get. So the BYD sales, they're building everywhere. They're shipping out everywhere. They've got trillions of cars. They've just built a gigafactory that's like the size of California or something.
Yep.
What happens if... when the US has obviously put the tariffs on, and then
Europe put tariffs on,
and they can't ship them out.
Right. Well, in that case, China's got a shitload of problems.
Shitload of cars.
Absolutely. Well, this is the problem, right? This is the problem that people, and we'll talk about more. We talked about this more in the tariffs, but what we said there was you've got to remember China's the big exporter. Right, Germany, Japan, they're the ones who are really going to struggle. Now, the US struggle, absolutely, but the US is an importer, right? So they can say, well, the US has got a car industry, right? And it's not an export-oriented industry like China's and Japan, right? So they're the ones going, China and Japan are going, man, what are we going to do with all these goddamn cars, right? That's a problem for them. The US is saying, our cars are more expensive, but hey, we're not laying off people from the car factories. In fact, things are going well because people have stopped buying BYDs and they're buying Chevys or, Fords or something.
But definitely not Teslas.
Probably not Teslas. I think sales were down 14% on the quarter and, they've dropped a lot. Look, as I said, there's a leaked audio of Musk in the White House saying to Trump, it's bad, it's really bad. And Trump's going, it'll be all right. And Musk is going, no, it's really bad, it's really bad. And, as I sort of said, you get these blokes every cycle, right? You get the hero that turns into a villain or he turns into an idiot. And what I mean by that is, Elon Musk is full of hubris, right? Running around on stage with a chainsaw thinking that people are going to go, yeah, that's my brother-in-law that you're chainsawing in half at the public service. Best of luck being popular. Now, if you're a politician, you don't do that stuff because you know darn well they're not going to vote for you.
Yep.
So if you're Elon Musk running around, you look at a Tesla and go, you think I'm going to buy your car? I mean, honestly, he's a moron. Yeah. There you go, right in about that, fellas. I've used the word moron again. But seriously, he's an idiot for doing that, right? Yeah. And now he's got to backtrack. Right? When you get the president flogging bloody Teslas on the White House lawn going, I bought a Tesla, it's like, dude, they're in trouble.
I just find it funny how people relate Elon's intelligence is a direct parallel to his wealth. Like, because he has billions, he must be intelligent. Yeah. It's just a paradox that doesn't make sense.
Well, there's a lot of bank robbers who have got a lot of money.
Yeah.
Are they intelligent? You could argue that, but you could also argue they've just been lucky.
There's a lot of drug dealers that have a lot of money.
Absolutely.
Yeah.
That's what I mean. It's one of those things. But, you can put up the next one too. This should cause apocalyptics. There we go. Righto.
We can't post the video now.
No, but see, look, a survey of 100,000 Germans revealed 94% won't buy a Tesla, right? And the other 6% probably can't afford one.
Yeah.
But you see, in 24, Tesla saw a 41% reduction in sales in Germany compared to 2023, despite EVs overall surging 27%. And that's like if you look at the slide going back, BYD is up 63 and Tesla's falling. That's remember when we talked about sector ETFs?
Yeah.
If you've got an energy ETF and the whole sector is falling, you're going, oh, well, it's the whole sector, right? If you've got a sector ETF and you go, BP's falling 45% and everybody else is surging, you're going, that's not a sector problem, that's a BP problem.
Yeah.
And that's what I'm pointing out here, right? This is a Tesla problem. This is not an EV problem in terms of BYD and stuff. They've got separate issues, but this is why Musk is in the White House crying to Donald Trump going, it's bad.
EVs in general are outselling petrols in most places.
Yeah, but again, they've had heaps of subsidies and that's going to change now because Donald Trump hates EVs. Yeah. This is why I could never figure out why Musk was ponying up to Trump. Because Trump hates all windmills. He hates that green energy. He's talking about, drill, baby, drill.
Yeah.
Well, you don't drill Teslas.
Drill some batteries up.
So, I have no idea. But to me, that shows you that Musk is not that smart politically.
Well, he might have been, this is all speculation, he might have been played by Trump going, well, this guy's got a massive ego, lots of money. Yeah. Let's see what we can do with him.
Yeah.
Anyway, this has aged well. So when the US sneezes, we catch a cold. And so we obviously know now we're recording this that the US has sneezed. Maybe let's talk about why. Why everyone else catches a cold.
Right. Well, it's just the interconnectedness of global trade. But the more important point is the interconnectedness of the capital trade, right? So in other words, money. Follow the money. Money goes everywhere, right? Most of the money is going to the United States and has been. We talked about it, for the last 6 months, we talked about the US being the market cap to global GDP of 65 to 75%, right? When their when the global, Steve, get it right, 2 coffees. When the US is 25% of the global economy.
Yeah.
So a logical thing should be, 25 per 30% of the global market cap. Well, it's 65. The reason why is because the US has been the best performer and that's where everybody's putting their money, right? And foreign governments put their money in the US for other reasons as well. And that's part of the problem, right? Instead of exchanging the currency back to Chinese yuan, what the Chinese do is just keep pumping it back into the US. So you've got this weird sort of putting fuel on fire.
It's like a flywheel.
Yeah. they just keep making it worse and worse. And that's why I've been saying for years, we're just going to have the same blow up because the system has not changed. It's like having a flood, getting your house smashed, getting it flooded, and then saying, oh, maybe we should build a wall. No, let's just build a house again. Okay. Well, you look at it and go, dude, you're in a flood zone. You're going to get flooded again.
Let's build another one in the floodplain.
Yeah, you need to do something, right? You need to build a bloody big wall. Well, that's what Trump's doing now with the tariffs.
Yeah.
Right?
All right. Let's quickly move on to this week, or the week that was, and talk about, this is an interesting one. We've talked about it a lot. You especially have the new normal.
Yep.
Let's just spend a couple of minutes just deconstructing what this is, and then we can move on.
Yep. This is basically the stages that we're going to sort of go through. This is not my new normal, by the way. This is a thing called The New Normal. It's a newsletter we recommended to subscribers a while ago. Great guy, Paul Hodges, mainly deals with chemicals and stuff. And that's really good because the first ones to see a downturn are usually chemicals and commodities, right? Because people go, listen, dude, I don't need any more iron ore. Things have fallen off, right? So they're the sort of canary in the coal mine. Anyway, long story short, we are now in growing disruption. Move to beggar thy neighbour trade policies. That's reciprocal tariffs.
Yeah.
You tariff me, well, I'm going to tariff you, right? Trade barriers, tariff barriers increase, that's what we got. Defence spending escalates, that's what we've got, right? And I think we're going to be in point 3, all-out trade war, fairly soon.
Yeah.
So hang on to your hats, folks. It's going to be a bit of a rough... Folks, we're seeing a bit of turbulence ahead, and maybe we'll ask you to put your seatbelts on.
Seatbelt on.
Yeah.
In, brace position.
Now, could I just... he hasn't got it up there, and I just want to read this part out. Now, the reason why is it's really important. This is the reason. This is an excerpt from Trump's executive order ordering the tariffs.
Right.
Okay? This is what Trump said. This encapsulates the whole problem. And I think we talked about it in the tariffs on Monday, but I want to repeat it here. Okay. Large and persistent annual US goods trade deficits have led to the hollowing out of our manufacturing base, right? This is the same as Australia too, folks. Inhibited our ability to scale advanced domestic manufacturing capacity, undermined critical supply chains, and rendered our defence industrial base dependent on foreign adversaries. Large and persistent annual US goods trade deficits are caused in substantial part by the lack of reciprocity from our bilateral trade relationships. This situation is evidenced by disparate tariff rates and non-tariff barriers that make it harder for US manufacturers to sell their products in foreign markets. It is also evidenced by the economic policies of key US trading partners insofar as they suppress domestic wages and consumption and thereby demand for US exports while artificially increasing the competitiveness of their goods in global markets, right? Think Chinese products, right? They subsidise the buggery out of them and they level everybody else's market, right?
Yeah.
These conditions have given rise to the national emergency that this order is intended to abate and resolve, right? So what I'm saying there is that's what Trump, and he's 100% correct, right? He is 100% correct. Those countries have been taking advantage of the US. Now, you can argue all that stuff about the US got it too and blah, blah, blah. I get that, right? I get that. But these countries have been told, it's like Trump said to NATO, the Europeans with NATO, you guys need to start spending more money. Yeah. You guys nearly fucking start to spend more money. Yeah. Right, I'm going to disband NATO. Oh, my God, this is terrible. It's like, hey, I told you 10 years ago.
Yeah.
Right? And so they're really will it hurt the US? Absolutely. But it's going to hurt a lot of those countries even more.
Yeah, well, it's kicking them into gear and they don't have any kind of foundation.
Well, they're all outraged about it now.
Yeah.
I mean, seriously, you have to look at it and go, guys, you've been taking the piss out of America for 20 years, but now you're going, oh, my God, this is outrageous. It's like, really?
Yeah.
I mean,
in some ways, it's not even about Trump. A lot of these things aren't even about Trump.
Absolutely. Joe Biden smashed China with some tariffs as well.
Yeah.
It's been coming for a while. And as we said, in 2015, China put out a document which said Made in China 2025, where they basically said, here's what we're going to do. Right? And the Americans went, okay, well, that's not part of the deal.
Yep.
And the Americans are now responding.
Yep.
Right?
Yep.
So, as ugly as it's going to get, and I know I need to clarify this, I'm not a Donald Trump supporter, but I'm saying to you that the problems were going to have to be dealt with by Trump or by Biden or the next president.
Anyone, yeah.
Absolutely, whether they're bloody Democrat, Republican or whatever. It's going to have to be dealt with because, as I said before, we haven't changed the system. So, if you do the same thing, you get the same output, right? Like we talked about with the flood. Well, if we have a flood every 10 years, i.e. we have a global economic crash every 10 years, and we don't change the system, guess what? We're going to get a bloody crash every 10 years.
Yep.
Right? That's what's going on.
And we're all shocked when it happens.
And that's what I mean. Everyone's going, oh, this is outrageous. And then it's like, okay, well, this is where people go, oh, this is terrible. I'm going to have to pay more for my coffee. And it's like, oh, okay, well, do you think Billy in Alabama should have a job?
Yeah.
That's what it sort of boils down to.
Yeah. All right. So foreigners hold a significant amount of US stocks and fixed income.
Yep.
And that's obviously changed over the years. We spoke about it briefly. All this is really saying is if there's turbulence and foreigners sell out, it could have significant issues on the equities.
It will.
Yeah.
It will.
And then we've got...
Stay short. Not advice.
No. I'm looking forward to Monday.
Righto. Now, just remember, hubris, right? And that big, long German word, Schadenfreude, or whatever it is, where, you get a feeling from being an arsehole.
Yeah. I've had that for a long time.
Well, you're private equity. You're used to that sort of stuff. Kicking people to the sidewalk.
I'm a good guy.
Righto. Retail
Right.
sales have fallen a little bit. That'll be old news in about a month as the joint crashes.
Yeah.
So, righto, next. Oh, the market greed index at 52. Since then, it's now at about 2.
Yeah, it's extreme fear
It's
now.
extreme fear, yeah. So, outdated, folks, just like we said. Every time we put something up, it's like, nah, sorry, update.
Yeah, volatility for you though, right?
Exactly.
Liberation.
Liberation Day. There we go. God, Jesus, where do you start? We talked about a lot of that in the tariffs. So by the time you hear this, it'll probably be old news and it could be re-Liberation Day, God knows.
They could just cancel the whole lot if you want.
Oh, God, mate. Who knows with that bloke? Anyway, here's the reason why. The reason why is China was subject of 198 trade investigations alleging dumping and illegal subsidies. That's why America's pissed off, right? Because the Chinese keep giving them the middle finger and not doing anything, right? And that's why Trump said, right, well, we're going to fix this, right? So double the previous year and equal to nearly half of the measures globally. So everyone's complaining about China. China's relied on a surge in exports, right, which, as Trump said, hollows out the industry, right, creates unemployment or high debt to sustain growth and offset weak domestic demand. That's what, again, Trump said, right, which is China's consumption is really low to GDP, shockingly low. America and Australia are at about 75%. China's at like 40.
Wow.
Right? So in other words, what we're saying is China, you really need to step up and start buying lots of stuff. But the Chinese won't do that. And we've said before, Xi won't do it because Xi doesn't like consumption. He thinks that's welfareism, right? Which he says is Western decadence. Right?
So he's good. So, but how do you? This is the question. How do you fix it then? How do
Well,
you?
by smashing them.
Yeah.
By saying you can build 45 million cars, your domestic market's 20, good. You're not
Keep
sending any to us. Now you've got to buy space for 25 million more cars. Right? And that's what they're doing. Because China's overcapacity followed Japan's overcapacity, followed Germany's overcapacity. So, this, as I say, this is going back 25 years, right? There was a book written by a guy called William Grider, I can't remember the name of it, but he was basically saying 25, maybe even 30 years ago, there is so much spare capacity in the global economy, something's got to break. And so we're at the point now where technology is so efficient, we can build 100 million cars and the global economy's, got room for 30 or say 50, right? Well, what you're doing is saying, well, hang on, we've built too much capacity. So when you say to China, okay, you imagine if you said to China, right, no more exports of your cars, right? China would go, Jesus, we've got 1 million workers in these car factories. What are we going to do with them? Because we can only, what Trump is saying is, I'll tell you what you should do. Give everybody a goddamn car, right? Stop sending them to us and making it hard for our car industry. That's why Australia hasn't got a car industry, right? Or
it's like it's similar to Japan, where everyone's moved into the cities because they don't need a car. They all live in high rises, and
they're old,
and
they got great public transport, right? All that sort of stuff. So that's why this has come about, right? And as I say, it's partly the fault of the United States, but it's also largely the fault of Japan and China and Germany, because they've been told for years that they need to increase their domestic consumption, right? But they refuse to do that, right? They refuse to. Oh God, what's the word? Restructure their economies to make them more consumer oriented. Japan's the same, right? Their workers don't get paid that much. Right, and again, the problem is because Japan's always fiddling with its bloody currency because it doesn't want to make any reforms.
Yeah, well, there's a massive separation between the rich and the poor in Japan as well.
Yeah.
So the same as everywhere else.
And again, that's exactly right. You see, that's part of the problem in America, right? The poor people are so poor, they're saying, well, this is bullshit. We can't keep going like this. And that income distribution breakdown is a result of government policies, but also a result of China and Japan and Germany continuing to export, right? And that's why you look at Australia, we've got bloody, everyone's either an engineer on 400 grand or they're a bloody barista on $4.50.
Yeah,
right. It's and house prices are through the roof.
Well, I mean that's partly because banks are lending to anyone with half a penny.
Well, yeah.
But let's talk about this. So gold. Yeah. So we've got gold. Commodities are holding up. Silver's also done incredibly well the last few months.
Yep.
What are we likely to see here? Commodities.
Well,
continue.
We've talked about commodities for a while and energy, bonds, maybe, but really, US stocks are in serious trouble. I think. Gold will probably continue to do well, even though it's done really well. This is the difficulty now with trying to predict what's going on. And making predictions is, I'll be blunt here, making predictions is fucking useless. It's what your position of your portfolio is, right? Yeah. It's no good if I went, see, I told you it was all going to crash, and then I go, oh, my portfolio's down 60%. It's like, oh, okay, congratulations. The point is, how do you deal with it at a portfolio level?
Yeah.
Never be afraid, and I think we said this last week, don't be afraid to hold cash. Even if you say, if I sell down my portfolio, I might lose, for example, $10,000, right? Okay, that's fine. If you go to cash, you go, oh, I lost 10 grand. Okay, well, think about it in 6 weeks. If you go, Jesus, now I'm down 35 grand, right? Again, it's time frames. What, the 3 well strategy that we use is different. How much cash you got?
Yep.
As I said, wealthy people will be looking at this going, cool, hope it crashes another 30%. I'll pick up another house and lots more stocks.
Yeah.
The point being, they've got the money.
Yeah. Yeah, they've got it at the side.
Right, so they can use it.
If the market loses 30% and you lose 15%, you've done well. This is like...
Well, yes, comparatively.
Yeah.
But you still don't sit down and go,
Whoopee.
like it's The fund manager goes, we outperformed the market. It lost 30, we lost 7. It's like, okay.
Yeah.
That's not too bad.
Yeah.
But you still lost 7.
Yeah, but what's next? Are you in a position to
Exactly right.
to then, if the market gains 30, you gain 40?
This is really where you want to watch Warren Buffett, right? You really, really want to watch Warren Buffett because, if Warren goes out at the end of the year because he's 146, this may be one of his great years because he'll be looking at stuff now going, man, that's cheap, right? And he'll be buying for the long term. This is what Buffett does, right? This is what he does. He'll be rebalancing his portfolio, right? Look at him. He sold Apple, a few months ago, sold half of it. Now it's down, it's down 20% or something. I mean, the old bugger's a wizard, right? But watch what he does. I suspect he'll continue to buy commodities, right? Occidental Petroleum, it's cheaper than when he bought it, right? So he's going to be buying more of that or, Bank of America, I'm not sure, but just pay attention to what he does because, the old bugger's seen a few of these.
Yeah, I mean, if you move, there's still equities could come down another 20, 30%
easily. The Cape ratio is still at probably 35 or 34.
Yeah.
It's not, the average is 17. We still got another 50% to go. You got to remember, we're not down much. We're only down about 12 or 13.
Yeah.
Might be.
It's just come down in 2 days.
Yeah. But, again, bulls will say, oh, my God, we're back to 2022. And it's like, yeah, but we could be back to 2016 real quick.
Yeah.
Right?
Yeah,
So-
okay. Last one. You want to talk about Meb then we'll wrap it up?
Yep. Yes, well, told you. No, just saying, that what Meb is highlighting there, and again, it's only 3 months, so, but cheap global stocks ranked by Cape are up 20%, US is down 4%. So that's now probably, cheap global stocks are now up about 10 probably, and US is probably down about 15. But again, cheap, buy cheap markets with a low Cape ratio. Long term, you'll probably do all right.
And rebalance, yeah. Great.
Yes.
All right, we'll wrap it up there. As always, if you have any questions, especially while it's volatile, please reach out on the socials or through email. And if you're a long-term listener and you haven't subscribed or followed or left a review, please do that. It really means a lot. Thanks, guys. Thanks, Steve.
Cheers, mate.
As always, remember, we don't provide financial advice.